Good morning, good afternoon, wherever you're calling in today. Welcome to our webinar titled Are Carbon Credits the Next Bitcoin? Have you been hearing about carbon credits and wondering if your business can benefit from it? Have you been wondering how to grow your impact in the climate space? Thank you. Well, today I'm very honored to be joined by a number of panelists and colleagues actually in the climate space to help enlighten us further about the carbon markets and carbon credits as well. Joining me today is my Vice Chairperson of Circular Business Association and also Senior Partner of ACMF IPF, Mr. Louis Chung, who has backgrounds in investment banking and also involved in the private fundraising markets. His passion for the climate space is something that has driven him to participate in our activity and also share with us today about why fundraising climate matters are important for fundraising preparedness and also IPO preparedness. Secondly, I'd like to also introduce Mr. Neil Lin from QYH. He is the co-founder and CEO of Beijing Qian Yuhui Environmental Technology, and he has a background in he has a background that covers PhD from Renmin University of China Law School. And with nearly a decade of experience in the voluntary carbon market, Neo has actually led QIH to develop a high quality portfolio of nature-based carbon offset projects in key market segments, such as afforestation and grassland restoration. Also, as a member of RUC's Metaverse Research Center, NEO is committed to applying the Web3 toolkit to carbon markets, enhancing project monitoring and verification capabilities to create high-integrity carbon credits to meet the growing international demand. I would also like to introduce Mr. Neo's colleague, Mr. Derek Ling, Executive Director of QIH, previously also the VP of Sina.com, part of the founding team there, as well as executive of Apple Inc., founder and CEO of Tianji.com, the first professional social network in China that IPO'd in 2014. Derek also received a master's degree and was a PhD candidate at Stanford University and attended Cheung Kong Graduate School of Business CEO class. Derek has actually 2 decades and more of experience as a serial entrepreneur and a venture investor in China, focusing on early stage TMT startups. At QIH, Derek oversees the company's strategic direction and fundraising strategy, guiding QIH to scale and bring its digital MRV technologies and ESG solutions to the global carbon market. Next, I'd like to introduce Mr. Manli Liu. He is the managing partner of Knightsbridge Capital Asset Management Limited, an investment firm that focuses on multi-family office business. He's also the Chief Executive Officer of V Carbon Limited, destined to create great impact on the environmental, social, and economic development in Papua New Guinea. Ms. Liu is a seasoned investment manager with almost 30 years of experience in global capital markets. He has worked for leading financial institutions such as Morgan Stanley, Citi Private Bank, and CITIC Capital, where he advised clients on trading and investing in various asset classes, including fixed incomes, equities, and currencies. He's also managed hedge funds and developed risk management systems using cutting-edge technologies and quantitative methods. He has a master's degree in aeronautical and astronomical engineering from MIT US. He's a certified financial risk manager, chartered alternate investment analyst, and a sustainability and climate risk professional. He's completed the MIT FinTech Future Commerce online course and also recently completed the ESG reporting certification course at the Hong Kong Chartered Governance Institute. He's personally, he's also passionate about innovative and sustainable investment. So I am your host for today. My name is Lijin Chin. I'm the chairperson of Circular Business Association. And on a very personal front, I am very keen to actually explore how the carbon markets could be a powerful tool to help extend our impact in the climate space and sustainability, which gave me this very unique opportunity to bring together our panel of speakers today. One of our speakers, Mr. Billy Richards, unfortunately is unable to join us due to our emergency meeting that changed his time zone. But Billy, he's an Oxford graduate that actually uh, began with computational and molecular biochemistry, but then moved on into becoming a successful and technology executive specialist, specializing in emissions trading. He has actually sent in a short video with his sort of contribution to today's webinar. But with that, I would actually like to begin today's webinar by maybe highlighting, where we are in terms of the situation we face today. So the latest conference of parties on the climate situation actually just closed on the 13th of December. And one of the really sort of strong points that came out from the conference of parties was this global stocktake. And it actually showed that by reviewing all the sciences and everything, we have already increased the temperature of our entire Earth by 1.1 degrees Celsius. So if you can imagine when we have a fever, just a few degrees Celsius is already causing us to feel really uncomfortable and, tired and lethargic and everything starts not working well. Well, our Earth at the moment is already in that fever state. And we are on course actually to increase it more than 2 degrees Celsius by the end of this decade, which is really, really dangerous because the warning is actually really clear. Now, the warning that has actually been issued from the science is that it's not because we don't have the know-how in terms of what to do. It's not that we don't have the technologies that can help us solve the problem. The main warning here is that the pace and the scale of climate action is actually insufficient to tackle the climate crisis that we are in today. And if we are continuing on this scale to increase the temperatures by so much, you can imagine a fever that goes, really, really bad. And what we're going to be facing is water scarcity, food production disruptions, health concerns. COVID is just really a teaser for the effects that we will see from the climate situation. And there will be many other some breakdowns that we see in the ecosystems that support us on many fronts, which ultimately will affect the well-being of the people, you and I. Not just our grandchildren, we're actually talking about our direct experiences in the coming decade. But it also provides us with a very unique opportunity, because what it means is that those of us, you and I here today, who are in these positions to make decisions, to take action, we are part of that last generation that can solve the climate crisis. Our choices that we make today actually are going to be the ones that will be locking in either a very catastrophic, unbearable climate situation where we have our future generations will have to live to, even if we actually reduce our emissions to net zero by 2050, it wouldn't matter anymore, because the science actually says our runway is the next 7 to 8 years. So as the last generation of people who can actually solve this climate crisis, there is a lot of opportunity in this crisis to actually do something impactful. Unfortunately, though, the climate movement 1.0 is not going to deliver that 45% emissions reductions that we need in the next 7 years. And what do we mean by the climate movement 1.0 is that it's been really driven by a noble cause, charity, sort of no profit, and it's your responsibility, right? The fact that you have clean water and clean air alone should be enough for you to take action. Climate Movement 1.0 is also very focused in terms of individual efforts into things like what is your personal carbon footprint, or don't use this particular product, or don't eat this, or don't eat that. And it's also very vertical focused in that it focuses on specific industries and sectors. What is the energy sector doing? What is the electric vehicle sector doing? Et cetera, et cetera. It also talks a lot about minimizing the bad impact and getting to net zero. But getting to net zero and minimizing bad impact itself actually confines us to looking at the innovative solutions that may be possible in order to create a net positive, to actually heal the planet, and actually, because we are alive, be able to generate more good things rather than just doing less bad things. Lastly, Climate Movement 1.0 is very much focused in terms of the past actions. Whose responsibility is that? There's a lot of time used in discussing that, and also that it's not good enough. Whatever anybody is doing is not good enough. And essentially, if you look closely, the emotion that's driving Climate 1.0 is guilt. Now, the problem with guilt is that it is very paralyzing and it doesn't actually help people, tap into their human ingenuity and creativeness to start solving problems. So, we also find a problem with this noble cause narrative in that 80% of humanity still lives on less than 10 US dollars a day. I'm sure there's been an update in these statistics, but since the pandemic has happened, we have seen reversals of sustainable development goal achievements. And not only that, we are in a situation now whereby there is weaker economic growth and also high inflation, higher cost of living that people struggle with. So if we don't deal with the basic issue of livelihoods and how people actually make their incomes, how they can find their livelihoods to lead the lives that they want, then sustainability and climate issues are going to stay on paper for a longer period of time and therefore not generate the impact that we need, the pace and scale that we need. Also, when we start looking into where the emissions are, the power sector, yes, contributes a lot into the emissions, but 45% of emissions is actually embedded in how we make and use products on a day-to-day basis, right? Not only as individuals, but also as organizations and as businesses. So when we start talking about making the pace and scale that we need, the entire economy actually needs to change. It's not only the way of life in terms of how people access goods and services, but it's also about how people make a living, how people access their livelihoods. And from our association standpoint, we believe that an update is very much necessary. An update that goes to Climate Movement 2.0 that focuses on increasing the ecosystem approach so that together we can profit and together we can solve this issue of livelihoods. Because even though consumers are the last point before pollution emerges or emissions emerges, they actually have very little control in terms of what goes into those things that they use. Before they even touch or use those products, decisions have been made at the products or service providers level. It's been made at the production level. It's been made at the design level, and even the choices of raw materials, etc. So our association, Circular Business Association, believes that we have to focus further upstream where the entrepreneurs and consultants are, the investors, funders, regulators, and even the inventors and product designers, so that we can drive more impact that's built in, so that not everyone actually needs to understand everything before we can achieve the impact. And the circular economy actually gels very well in terms of this concept because by design, the circular economy is talking about restorative and regenerative impact. So that every time our economic activity actually happens, when you and I on a daily basis use something and be alive, we can actually contribute to a more positive outcome. And the circular economy does so using three principles, which includes designing out waste and pollution from beginning. If we can't even deal with these things, we should remove it, not even have it produced in the first place. And this applies also to those GHG emissions. It's also about keeping products and material in use for as long as possible at its highest value, so that if we did need those materials and emissions to create those day-to-day living things, we would actually be able to utilize this as much as possible instead of just chucking away into a landfill or incineration, etc. And the last thing is to regenerate natural systems, in that everything that we produce, everything that we use, it by default would actually help to build back and heal the planet and actually heal those natural systems that provided those resources to us. Now, of course, talking about the circular economy can seem very vague and big. And how would our association try to help solve this problem? Now, we've actually talked to a number of business owners who have their own products, right? They have their own green products, maybe they have their own carbon products as well. But we realize a lot of times they're going to the market alone. And what it means to end clients or people like you and me who want to actually go into sustainability is that it's a major headache to even understand how these different suppliers, vendors, talents, solution providers can help us solve a problem. So what we want to do is actually build this profitable ecosystem that aligns all these different vendors and suppliers, be it the people in the recovery and repurposing of materials, nutrients, components, parts, or even products, or those in raw materials, the manufacturers, quality and compliance, distributors, service providers, and even end users and the fan base themselves, not forgetting the regulators, technology providers, logistics and delivery, product designers, talents, across various business functions, and the investors, so that together we can actually fill this gap. Now, what this gap is that there are a lot of people who say that, okay, we've issued our sustainability and climate commitments. We sort of know the direction that we're going to go, but we may struggle actually about how we're going to do it. And most importantly, who can help us on the ground to implement it. And this is where I would like to share a very short clip about our association. And I hope you will be able to understand the emotions and passions that we put in when we formed this association. So how would this all relate to the carbon markets? From our association standpoint, carbon markets is a powerful tool to actually grow the pace and scale. It can be used to create an unfair advantage for providers that can actually solve the climate crisis. But for a lot of companies, especially SMEs, it's too far away to achieve and they're unsure where to start. So we have actually set up a task force to actually start aligning the various providers in the carbon market that can enable all of us to actually participate much better and drive that pace and scale into the carbon markets. With that, I would like to now pass the floor on to my Vice Chairperson of Circular Business Association and also Senior Partner of ACMF International Private Fundraising, Mr. Louis Chong, so that he can share his presentation on why the climate issues are important for IPO readiness and fundraising.
Thank you, Li Jin. Today's my sharing are not meant to be representative of the entire fundraising universe. Many of the private capital raising data are not available due to the confidentiality of the deals. For example, the deals data in Russia and Iran are not really available to many of us. Climate crisis has become so serious that prediction of doomsdays and mass extinction have surfaced. And we know about climate change since 1640. Why we didn't start our first industrial revolution in 1750 differently? Probably we should have included circular economy right from the beginning. And in year 2021, a survey was done on sovereign funds and institutional investors such as Abu Dhabi Investment Authority and Indonesia Investment Authority. Only 9%, single digit, 9% of the investors said addressing climate change was consistent with their investment mandates. But last year, just 1 year later, 91%, two digit, almost like, 91% said addressing climate change was consistent with their investment mandate. What has changed in that 2 years? Last year, Malaysia launched a BCX, Bursa Carbon Exchange. Singapore launched CIX, Climate Impact X. Thailand launched its FDIX. And China launched its only international carbon exchange, the HNCEX. It's coincident, not really, because the momentum been built for a while already, but then it's time that it all come together. But when it comes to sustainability initiative being failed, I'll call it fail because it didn't stop the climate crisis. It's funny about the sustainability initiative that we need money and profit to sustain them. That's why the movement 1.0, it didn't solve it. It didn't stop the problem. In year 2015, when we started our climate initiative, we observed that whatever is not profitable is not sustainable. That's why we started, and I quite aligned with a Paris Agreement signed together with over 190 countries, legally binding. And last year, Tesla has earned over 1.7 billion US dollar revenue from carbon credit. And the European carbon credit, the EU has increased from less than 10 euro in year 2017 to over 26 euro quarter one 2021, and it reached 100 euro March this year. Since last few years, there are some interesting development in capital raising market, private capital raising market for climate impact companies. The venture capital deals of carbon emission tech had grown significantly. The deal count has grown over 2.5 times from 274 deals in 2018 to over 734 deals last year. The deal value has grown over 6 times as well, from 2 billion US dollar in 2018 to over 13 billion US dollar last year. And the venture capital exit of carbon and emission tech companies have grown tremendously as well, from 0.2 billion US dollar in 2019 to over 5 billion US dollar in less than 3 years, a growth of over 28 times. And the companies holding patents of carbon and emission tax, something worth take note, they have secured over 80% higher valuation as compared to those without holding any patents. About capital raising of investee, expensive carbon and environmental commodity exchange platform has raised over 700 million US dollar. Ranza Tech, a company focusing on carbon emission reduction, has raised over 800 million US dollar. New Light Technologies, the company focused on converting carbon dioxide into materials to replace plastic fiber and leather, raised over 230 million US dollar. And Arex Energy, which convert biomass into biocoal and biochar, has raised over 200 million US dollar. And 1K5, a provider of residential climate tech, has raised over 680 million US dollar as at this point in time. I want to remind everyone that green tech companies, which been around for quite some time, are not immediately investable, because green tech companies are those focused on environmentally friendly technology, but not necessarily carbon emission tech. So carbon emission tech companies are those that are focusing on, because these are the ones that you can participate in the carbon exchange and generating carbon credit. So if you wish to increase your company valuation, raise more money, carbon credit, carbon capture are this area that you need to focus on. But of course, we are also noticed that it's still difficult now because we need more proof methodologies to cover all sectors of business. Soft climate crisis need the whole economy because economy is the one that generate the carbon footprint and key pollutants. So please reach out to Region if you wish to get support in this area. We believe carbon credit is just the beginning. There are other key pollutants causing climate crisis, gas like methane, nitrous oxide, and we believe that mechanism of carbon exchanges will be upgraded to handle other key pollutants as well. And I still also have a lot of questions in this area, like will the stock exchanges merge with the carbon exchanges to ensure capital deployments is managed for the survival Earthlink? I started to use Earthlink instead of human because it need the ecosystem to survive as well. Do we need another disaster like COVID to change the way we live, work, and play? And I also wish to share some interesting development of private capital market. Asia has beaten Europe and contributed 32% of the global deal in the first 9 months of this year. And in year 2020, there are only there are about 1,400 IPOs globally, raised over $330 billion fund. US IPOs raised over 155 billion, contributed over 45% of the global amount raised in year 2020. But quarter one to quarter three this year, the global IPO amount raised less than 102 billion, and US IPOs raised less than 20 billion, which was less than 20% of the global amount raised from the 45%. But China, excluding Hong Kong, has raised over 45 billion US dollar for the same period, which was over 44% of the global amount raised, and not really reported by many media about this. And dry powder, the cash available and to be deployed for private investment, was recorded at 2.5 trillion US dollar October this year. The dry powder increased because the capital deployments have become so challenging now. And another fact is that about IMF, World Economic Outlook April this year, Asia expected to contribute about 70% of the 70% of the global growth. And we believe that the global South market will be a very interesting market for private capital raising and also the investees business expansion. And global South is not about geography. Actually, it's a synonym to developing countries, least developed countries, underdeveloped countries, low-income countries, or out of favor third world countries, including Brazil, China, India, South Africa. So global South excludes most of the European countries. Exception is Bosnia and Herzegovina. Over 51% of its population Muslim. I'm not too sure, is it coincident or what? And then the combined GDP in purchasing power of BRICS country overtook the G7 countries already, actually in year 2020, and not many people realize, and people still thought G7 actually much larger than BRICS. Next year, and that statistic have not included the new economy like the additional economy like Egypt, Ethiopia, Iran, Saudi Arabia, and UAE, which will join the BRICS in a few weeks' time. And we believe that the compliance of private capital raising become more challenging at the same time, and the rivalry between the global superpower will continue for the foreseeable future. Sanction, de-risking, and national security will become critical consideration of private capital raising. And however, the implementation of the sanction will have become difficult because there are non-US dollar payment system not using SWIFT payment. The rise of using non-US dollar satellite phone to penetrate global South markets, secure the market in a non-US dollar product and payment system, and roll out 4G, 5G when the market is more ready. So next 5 to 10 years are extremely interesting for those in private capital market. Thank you. Back to you, Li Jin.
Thanks very much, Louis, for that insight. And I'm very happy to actually see that, that it's not that the money isn't there, it's just how we're going to actually move that money. Even in the latest COP28, we actually did see that the, financing gap is still a major topic that's being discussed. And that's, I guess, why today's webinar is very important, because when we start talking about carbon credits and all that, we are also talking about how we're going to move that financing around. So with that, I'd like to actually move into our moderated panel discussion, whereby I would bring on board our three panelists who are with us here live today, Mr. Leo, Mr. Derek, and Mr. Manli, to I guess start introducing actually what your various organizations actually do in terms of the carbon markets. I would also play a very short clip after that about what Billy's organization Changeblock does as well. So maybe I can start off first by sort of like inviting Mr. Neo to start off, and then maybe Mr. Derek can add on to that. Yeah.
Sure. Yeah. Thank you, Lei Jin. Create our company dedicated to developing nature-based solution carbon projects. We specialize in creation of forestry and grassland carbon projects in China. In the context of international carbon trading, we offer a green financial place that enable projects in remote area to secure funding through carbon trading. Our focus is leveraging these nature solutions to address environmental challenges and provide sustainable source of funding for projects in ecologically significant regions. Through our expertise in developing and management carbon projects, we contribute to mitigation climate change while fostering the economic growth in remote area. Yeah, that's the function of our company. And Derek, do you want to say more?
Maybe I'll just add to that. I think we really highly focused on the high quality nature-based carbon removal credits. That's we pay a lot of attention to high integrity credits. So we're not just another developer in that sense. The other thing I want to maybe emphasize a little bit is we really leverage on emerging technologies such as blockchain and remote sensing technologies, satellite technologies to incorporate into the whole voluntary carbon market space. So yeah.
Yeah, thanks for that, Mr. Nia and Derek. And I'm glad you brought out those points in relation to, the blockchain and also satellite imagery and all of those things, because I think for the benefit of our audience, they may not actually be very familiar with how those technologies and developments actually impact the carbon market. We can get back to that shortly in the discussion. Maybe now I can invite Manli to also introduce his organization and what they do.
Hi, everybody. Yes, I'm Manly, and we have just started our Carbon ESG project. Before that, we actually have been working, actually having a forest operation in Papua New Guinea, quite like 10 years ago. Thanks to the carbon market, as we have just come across, we're able to take advantage, having as you mentioned, an unfair advantage, that we're able to generate some revenue by having a preservation and conservation concept. Okay, so we are now, as Derek also mentioned, we are now working with the remote sensing company and trying to estimate the VCU that our forests have by actually trying to audit the total sum by not doing the logging activities. Yeah, it's very exciting because we have pieces of forest coverage, actually over 1 million hectares. So that's quite sizable, 10 times of Hong Kong. And what we are doing right now is actually not only that we are just trying to sell the VCU, but we want to, as you guys all mentioned, add integrity to it. So by doing what is like, we make sure that it's not only the climate impact, we want to do it with the C, as I've always said, that the alphabet soup, CCB, climate, community, and also biodiversity. So I think Papua New Guinea, well, when you talk about resources, this definitely is one of the places that, that attract our attention. But unfortunately, on the other side, it's a very remote country. So yes, it has the resources, but on the other side of it is they are very backward countries, and all these like governance and all that, they are not yet to the first world country level. So the carbon credit market basically help us to funnel the monies that's needed, or the capital that's needed to help us to create a nature-based solution for it. So yes, I think we just started the journey, and as you've said, we have like 10 years coming, and hopefully by the end of this era, we can create very sounding and very interesting case example here. So back to you, Legion.
Right. Thanks very much, Manli, for that. And it's good to actually hear, that apart from looking at carbon credits just as like a asset per se, that you're also looking to see how to actually use that to channel into other forms of sustainable development. And we will actually go into the next question. I will just prep our panelists that it's about the question people have in mind is, are carbon credits going to become like the next Bitcoin? Is it going to be like an asset class that we should hold and it will go up, and in the future we'll be able to make a lot of money from that? And I'll just give you a few seconds to actually think about that while I just play Billy's a very short introduction also about what Changeblock does. Okay, right.
Okay.
So let me just quickly share the screen, and here we go. Yeah, as a three-time founder with a successful exit under his belt, Billy has very strong technical, commercial, and scientific visions. And we're very honored today to actually hear like what Billy has been doing with Changeblock, and probably also to explore further this topic about are carbon credits the next Bitcoin. So maybe I'll just get straight into it with the first question. Billy, do you think you could let us know what your company does solve? What do you solve and how do you solve it?
I think that's a great question. Thanks, Legion, and thanks for the introduction. The carbon markets are complex, they're confusing, they're really quite hard to access. I think at the highest level they're inefficient, they're expensive, and they're complex. So Changeblock at the highest level tries to make them easy and efficient, easy to access, and straightforward. And by that I mean we take companies from any stage who could be doing anything that repairs or protects the planet, and we help them understand, is there an environmental asset, carbon credit opportunity there for them, and if there is, how can they proceed with that, and how can they develop that asset into a tradable product. And that journey is very difficult for clients, and what we've done and spent the last 3 years doing is in one half of our business is building that ecosystem, that network of registries and auditors and subject matter expertise and third parties that we can work with and make the journey very easy for the client so they can just repair and protect the planet. Now, I mentioned the word carbon credit a few times, and people might not know what that is. And the easiest way to think about it's a tradable product. It's like a coupon or a ticket or a stock that's value is derived from planet repair. And the unit of accounting is 1 ton of CO2. And so the way it's accounted for is you assess the project and you work out, well, how much CO2 is this in theory mitigating or avoiding or reducing? And so that's how you account for it. But then when you think about the diversity of the projects, you're talking from, in fact, my co-founder, John Parmesano, in 1977 was part of the team at the EPA that formed the first ever carbon credit. And that was a kind of a tax credit. So it's just a piece of paper. Now you have carbon credits that are backed by tree planting, literal, or by the prevention of trees being chopped down, or the sucking of CO2 out of the atmosphere and the injection of it underground, or converting plastic to green hydrogen, as with one of our clients, Fusion One. And you've got to convert all of this to a 1 ton unit, and that's very difficult to do. And we solve for that problem first and foremost. And then the second problem we solve is the fundamental lack of liquidity. The market really is in stasis. Trading was down 93% this year. And so the liquidity isn't there. The transactions take 3 to 6 months. There's huge information asymmetry between buyer and seller. And a lot of it is OTC. And so as a result, it's very hard for people to actually access the market to buy and sell and trade and generate that kind of capital velocity that we need to hit the market that we're expecting.
That's a bit of a clip from Billy. And with that, I'd like to come back to our live panelists, actually. I think when in Billy's point there, he actually did already start touching in terms of this issue of, liquidity and the trading part of it. So let's get straight into that question. Maybe I can start off first with Neil to say, what are your thoughts, actually? Are carbon credits going to become the next Bitcoin?
Yeah, from my personal opinion, I would say no. I think the carbon credit is not kind of next Bitcoin. And compared with the carbon credit and Bitcoin, they do not function as the same way as a kind of cryptocurrency or commodity. And both present some kind of value, but they serve different purpose and operate with a distinct within a different framework. Bitcoin is a decentralized digital currency that operates on the blockchain. Its value driven by the factors such as kind of scarcity and speculative trading. And carbon credits are traded with kind of context of carbon market, which are designed to incentive emission reduction and support sustainable practice. The value of carbon credit is influenced by factors like the regulatory development, carbon demand, or the emission reduction. So both carbon credit and the cryptocurrency can be both, and so they serve fundamentally different purpose. So I think carbon credit will not be kind of next Bitcoin. And David, maybe you have a different thought.
Yeah, Derek, would you like to add on to that?
Let me differ a little bit. I would give a yes and no answer, which I normally don't like, but I think that's actually what I really think. So in a sense, we can say it is a bit like Bitcoin in a sense that there is limited supply. So we all know that Bitcoin has 21 million. And it decreases over time. And so for the same amount of mining, you actually get less Bitcoin over the years. So in kind of a similar way, we know that the emission gap is 22.2 gigaton. And that needs to be mitigated by 2050. So if we think about the natural resources that we have that can be, whether it's forest or grassland, that can be converted into carbon credits, that's going to decrease over time. It's limited, Earth resources. So as we move over time, it'll be increasingly difficult and more costly to abate emission over time. The way that it's more difficult to mine Bitcoin as time moves forward. So, but the no part is that it's unlike Bitcoin in a sense that even if we look at some of the optimistic projections, we're looking at 100x in terms of price increase for carbon credits in some of the projections that we have. But Bitcoin is has increased over 100,000 x in terms of price. So it's really it's something that's much more suitable for the kind of trading and speculation and than carbon credits. And carbon credits, at least at this point, doesn't have that kind of upside that we're looking at comparing with Bitcoin.
Thanks so much, Derek, on that sort of point of view. And I think it'd be a good point now to draw to Manli. I think you did mention as well to me. Thanks so much, Derek, on that sort of point of view. And I think it'd be a good point now to draw to Manli. I think you did mention as well to me before the webinar started that, to some extent, we also don't want carbon credit prices to be soaring as high as the Bitcoin situation, and you have your perspective on that as well. Maybe you can share a little bit on that.
Yes. Thank you. The point is that when we look into the crypto market per se, the as an asset class, we see a boom and bust basically for the last 2022, mainly because there are like a lot of speculation and also a lot of scams in the market. So in my opinion, for the carbon market, we want that carbon prices to fit into the funnel into the necessary projects that will be able to sustain it. So in that point, if we are seeing too much speculations, so money is not actually going to the fundamental projects that's needed, the funding to do it. And the worst part is I don't want to see the market to just bust and then the funding will become dry up for that purpose to come. So I think, to learn from the crypto sector, we would want to see as a policy setters as stakeholders, we want to see the regulations not coming in straight, but then we want to set up something that would ensure that the high integrity values of the carbon credits to fit into the necessary projects in order for it to be sustainable. So this is some kind of my vision and mission and some kind of my hope to see what's happening in this market.
Yeah, and I think on that point, I think all three of you did mention to some extent, that there is this speculative part of it that cryptocurrencies have that perhaps in the carbon markets is not quite there, but there's still actually a lot of sort of suspicion, I guess, in terms of the voluntary carbon markets, into as in like whether or not these are actually real projects. I think in the last year or so, we've actually seen a number of so-called exposés and things like that about poorer quality types of carbon projects being found to not actually be reducing or taking away the carbon at all, and therefore investors are sort of turning away from putting money into these carbon projects and things like that. So maybe it's a good time as well to explore now into like how do we even know that these carbon projects are real, and what is happening globally now in terms of the carbon markets to actually make sure that these aren't going to be scams, these aren't going to be just a greenwash, do everyone feel good about it sort of situation. I see Neil is all ready to sort of answer that. Neil, why don't you go ahead?
Yeah, that's the main two question I want to answer about the coming question. And first will be I think the first common misconception is about purchasing carbon credit allow individual or company to continue emitting greenhouse gas without consequence. Some people mistakenly believe like buying credits is a one-size-fits-all solution, like completely offset their CO2 footprint. But in reality, while credit can contribute to emission reduction, but that should be part of broader strategy or the emission reduction portfolio that include efforts to directly reduce emission. So I would say the offsetting should be a backup plan or the second solution. The first will be definitely reduce your own emission reduction, CO2. And the second idea I want to mention about the additionality. Yeah, many people say the carbon offset project should result in the emission reduction will not occur without the financial incentive provided by the carbon market. Even some people argue like the certain project, especially people mention RED+ project related to forestry or some renewable energy project that happen anyway, regardless of the carbon market funding. But we have to say, in the current voluntary carbon market, there are several reputable carbon standard and strictly highly certification body that have a criterion to ensure a project that truly additional and bring about a real emission reduction beyond the business as usual scenario. So understanding these misconceptions is crucial to fostering a more info and effective approach to carbon project. Carbon market ensure they can see a part of a comprehensive strategy to compare climate change rather than stand-alone solution or the loophole for continuing high emission. So I hope people still have a highly trust to the global consensus about voluntary carbon standard, and they truly monitor each project's function and their real emission reduction volume. Thank you.
And I think we've started to see some of that trend as well, whereby, you know, projects that have very old vintage, which is that they're really old projects that have been approved with old methodologies, are becoming less sort of like popular. They're very cheap, of course, but if you want to actually demonstrate your company is actually more keen in terms of delivering real outcomes from carbon projects, we're starting to see more sort of newer projects being bought up by companies instead in order to cover whatever they can't reduce, if that's why.
Yeah, I think that's true, and as we've witnessed that just having projects that are VCS standard is not enough. So it's the whole question about quality, and I think what Neil talked about, the additionality becomes more and more important. As people look at and evaluate carbon credits, and as we attempt to increase the trustworthiness of carbon credits, and I think that's where technology comes in. So if you want to really do this on a scalable manner, you really need technology to come in. Whether it's through satellite imagery or sensory technologies, to really very quickly assess whether a project is real or not, whether there are any scams, and I think that's going to be an important step moving forward to really ensure that there is there's credibility to the market.
And sorry, just to, for the benefit of our audience who may not be that familiar, actually, why satellite imagery or even blockchain for that matter would be part of that trustworthiness. Maybe before Manli, you go on, perhaps Derek, could you just explain a little bit why did you mention these technologies in particular?
Yeah, I guess you can through placing sensors within a project, and through satellite imagery, you can actually also understand a lot about the project itself, whether the boundaries are set right, whether it has the kind of new forestry that was being developed over, let's say, the past 5 years as claimed. And you can look at satellite imageries for the past 5 years and more to verify whether these are new forestry or not. So it's something that we can use satellite to very quickly verify a lot of these claims.
Right.
Yes.
Manli, go ahead.
I want to comment on that because that's very exciting. We are actually having a few forests that has done what Derek, basically around what they have been, they mentioned. We cooperate with a remote sensing company from China, and then basically we look into all these data from different sea levels. So I think they have divided into the top part, and then the medium part, the swarm area, and then the lowland part. So basically they are the 3 heights, and then they take the satellite images and to see, the carbon content, so to speak. And then we actually, very interesting, our team together with the landlord the land the people, we just flew over the forest and then sending people and then setting up a 20 meter by 20 meter site. So in such a way that we want to basically try to see if the content that we measure from top down is actually tied into what we are getting, on the ground. So it's sort of like, the top down, bottom up measure to ensure that those are the carbon content that we have. Ongoing, I totally agree with Derek. I want to automate these actions in a sense that we can, we have to go back to this exercise every 3 to 5 years, and so as to ensure that from different sea levels. So I think they have divided into the top part, and then the medium part, the swamp area, and then the lowland part. So basically, they are the 3 heights, and then they take the satellite images and to see, the carbon content, so to speak. And then we actually, very interesting, our team together with the landlord, the people, we just flew over the forest and then sending people and then setting up a 20 meter by 20 meter site. So in such a way that we want to basically try to see if the content that we measure from top down is actually tied into what we are getting, on the ground. So it's sort of like, the top down, bottom up measure to ensure that those are the carbon content that we have. Ongoing, I totally agree with Derek. I want to automate these actions in a sense that we can, we have to go back to this exercise every 3 to 5 years, and so as to ensure that our so-called perishable carbon unit can be, sustainable. So we want to go back to this exercise, but this time along, we send the team, by human going in there. That takes like, a lot of our capital, because we have to fly in from the airplane and then take a lot of people and then doing it manually underground. I think this process, hopefully, in the end, can be automated. So all these, is like how technology can actually help us. But remote sensing is they're actually helping us to have the measurement of carbon stock. And that's also, I want to, give it a mention that this is some of the data that we need to collect as of, like a smart city, I would call it a smart forest, that, we want to collect those data in order for us to keep this sustainable work, ongoing.
Yeah, thanks very much,
Smart forest is a good term.
Sorry, come again?
Smart forest is a good term.
Yes.
Yes.
Yeah. And I think it sort of like for the benefit of those who may not only know about the forest type of projects, I think even the carbon credits also cover different types of projects as well. And the requirement of additionality actually varies between projects. It's not like any sort of project that either stores or reduce or avoids carbon would automatically qualify as a carbon credit project. Is that true? Is that something that maybe you guys want to elaborate a little bit more about? Does it necessarily mean that so long as you avoid or reduce or store away carbon, then automatically you would be considered a carbon project that can issue carbon credits?
I think the manual efforts are very important for the carbon project. I mean, for example, like on the market practice, currently most of IFM project improve pollution management, but that kind of credit are not popular anymore. And companies and participants and individuals, they like to purchase the afforestation project. They like that kind of credit can provide a highly additionality. So in somehow nature forests, like they really can reduce the CO2 emission. That's true, but that is not the purpose for the carbon trading. The purpose of carbon trading that want to provide the funding for a new project, new afforestation. And that's also, I think, the kind of question people argue REDD+ project in the rainforest, because the forest already been there for a long time ago. to avoid kind of economic development or avoid kind of logging. So people need to buy the credit from the Ray Plus project, and like for lots of question from the Guardian, from some newspapers, some media. So the whole market gradually changing and to the high level and more transparent carbon project. And I think this is a trend.
So there's definitely a
Yes.
gradual change into that direction as we want to make sure that the financing actually delivers the outcome that's needed. And with that,
Yes.
I just want to quickly share this quick snippet actually from sharing from Billy as well about how blockchain from their perspective actually adds to that trust part of it. And probably I think Derek and you and even Manli yourselves could add on to that point a little bit more.
Blockchain is a real it's a tricky one. For those who know, it was invented by this guy called Satoshi Nakamoto, who they actually think they've recently uncovered his identity. You can go Google it, but and it was invented as Bitcoin. And so the key consideration here is you can't have a blockchain without a Bitcoin. You can't have a blockchain without some kind of token, which are really well known nowadays as cryptocurrencies. And the issue here, before we even get into its relevance for carbon, is that crypto is the ancient Greek for to hide. And so, there's this immediate, I think, resistance to the word, because that people think that it's hiding something, when in fact it's just cryptography. And the reason that's relevant is because what blockchain does do is it provides immutability, it provides audit, it provides a track record that is unchangeable throughout time, that gives access to the absolute canonical truth to anyone who wishes to see it. And this all sounds quite high level and potentially a little esoteric, but it means that, for example, we have a project that converts plastic to hydrogen. I mentioned it earlier. We're able to monitor in real time the plastic going in and the hydrogen coming out. We put that data on the blockchain at source straight away with a timestamp. So at any point, anyone can go back and check the record and validate that at this day, at this time, this plastic went in and this hydrogen came out. And it builds a set of very strong building blocks for validating the integrity of the carbon credit. And it really provides that data, that trustworthiness. And the same stretches right over into the trading and exchange element of it. Blockchain gives you absolute transparency on who bought what and when and for how much. It gives, it really removes some, heavy lifting in terms of centralized parties and potential points of difficulty and corruption and other areas. But it comes with this anonymity element. And I think that's what makes people uncomfortable, is that you can be anonymous using blockchain because of just the way it works. It obfuscates your identity, and that's where the challenge is. But fundamentally, the carbon markets have been faced with significant accounting issues, double counting. Is the credit accounted for in the country of origin or the country where it's bought and retired? How do you account for the actual carbon being mitigated? How do we know the trees that I've just invested in some country in the global south are real? How do I know that the machine I've just invested in Norway is actually sucking CO2? How do I know this? Well, you don't, unless you visit it, or you believe the report that someone who was paid by the company to do the thing paid to visit it. And if you don't trust any of these, you start to get lost until you have this blockchain verifiable data that provides an absolute symmetry of information and really gives the financial services market what they need to be able to trade these things. Because if we just turn the dial a bit and look at this market from financial services, bankers, and hello to bankers who I work with and I'm friends with, bankers don't really care about what it is that they're trading, really. They don't really care about what's in it. They deal in a sense of excitement. Does the price go up? Does it go down? How much money can I make off it? Or how much money can I make off it losing money? And so for them, it just matters, does it tick the box? Is it certified? Is it standardized? Is it valid? Is it a legitimate asset? And so the more effectively, the better in which you are able to do that, to give them that integrity, to give them the certifiability of the asset, which blockchain enables you to do, higher value the credit will go for, the more liquid it will be in theory. And lastly, the easier and the more appetizable it will be to these big buyers. Because
Right. So that was a bit of a sharing from Billy in relation to the trust part of it. And on that note, I see money has just dropped off, but then I think what I would like to direct the question therefore in terms of like, I think Neil already touched upon it a little bit about any misconceptions, but
Yeah.
yeah, maybe if you had some further thought about, also what Billy was sharing about just now. And Derek, if you want to chip in as well, any top misconceptions that, is really stopping us from actually pursuing this carbon markets of further? Neil, maybe.
Yeah, I think I already mentioned part of it, and but I think I want to emphasize some function of the blockchain in the carbon market. Currently, the main consensus of the carbon market, they treat the blockchain technology as kind of prey to the whole market because they cannot provide the KYC, know your customer, and AML, anti-money laundering mechanism for the carbon market. But I want to say this technology can enhance transparency and integrity of carbon market if we use the blockchain technology in correct way, not only just focus on the tokenization of carbon credit into a kind of speculation market. If we pull the blockchain network into digital MRV and all the standard body process, different rules can play their function in the same network. For example, project owner, project proposer, project validator, verify the government, NGO, and buyer. They spray into the same blockchain network, and everyone can monitor the behavior on the blockchain. And the data flow since from the beginning and till the end when the credit was issued on the blockchain, everyone can see how it goes, how the project performed, and who performed the repo, who use those credit into the carbon neutrality. So part of misconception for the blockchain technology in carbon market, I would say they are too conservative to this technology. We should use this technology to enhance the market operation and enhance climate action in the correct way. Thank you.
Thanks very much, Neil. Anything to add, Derek, from your end?
Yeah, I guess there are some misconceptions about how carbon credits are like commodities that can be traded easily, and I think some of what Billy was saying, that it's a very complex. If it were a commodity, it's a complex commodity, and there are a lot of idiosyncrasies as an asset class. So there are factors that affect the particular carbon market, including what kind of standard it's developed under, what kind of methodology, the host country, the geopolitical factors affecting how people view a particular project, and the fact that the reputation and experience of the project developer itself could affect how the projects are viewed. So I think at least at this point, it's really hard to really trade it as a commodity. But one can imagine that, and also some of the things that Neil was saying, that the additionality factors are people pay a lot of attention to as buyers. But one can imagine a future where maybe carbon credits can be graded as a class, B class, C class, some kind of standardization whereby you have a whole set of carbon credits that are good, whole set that are not good, but within the good you have A grade, B grade, C grade, and then from there I think there's some possibility of being traded as a commodity. But before that, it's really hard to be traded like commodity.
And also, I guess liquidity is something that would be very important in order for this type of trading to occur. In that, if it's very hard for anyone holding the credit to then sell it off and then convert that back into cash or whatever, then it would make very little sense actually to get involved in that type of trading. Is that right?
Yep.
Yep. Okay. I actually see there's a question here in the Q&A that there's someone wanting just to clarify to say that carbon credits is it that it can be bought by any industry in order to offset, or do you have to actually prove that you already have reduction plans in place for your own operations before you can buy a carbon credit?
Yes, I think that's right. But then it also has some detail to enforce a reduction plan. Carbon credit will be just one method. Basically, individual or industry or just one company, they should plan how to reduce their CO2 and try to increase their energy efficiency first, and try to reduce their directly emit CO2 in the atmosphere. And then after those mechanisms are done, then credit trading should be the last result to take. So, and also the same question we can also answer about the rate. Rate should be only to be used to offset the Scope 2 emission. Offset the emission caused by the electricity. So rate only could be used in Scope 2. That's all. Thank you.
I think, Leo, the question is about whether anybody can buy carbon credits, right? Is that right, Li Jing?
Yeah.
That you don't have to buy to offset your own carbon emission, but you can just buy for the sake of buying. Is that the question?
Can you just buy for the sake of buying?
Yes, you can. There are actually a lot of firms that are kind of middleman firms that are actually buying for other companies that needs offsetting. So so it doesn't have to be offsetting on your own carbon emission.
Yep.
Hi,
and
Manny here.
I think I can hear Manly now. So Manly, you
Yes,
want
yes.
to contribute
Even though
something?
you don't see but I want to shed some light on this.
Yeah.
Recently, I think Singapore has signed agreement with Papua New Guinea, and I think she has done quite a number of agreement with other country, like if I remember correctly, like Peru and all that. In terms of from 2024 onwards to 2030, I think Singapore will implement a tax bill, ranging is increasing scale, okay, from 20 something up to even to 80, and then in the agreement that they signed, they allowed within that tax bills 9% is able to be offset using offset from VCU. So I think that's a very interesting point for us, because if we get the issuance of that VCU, we can actually help corporations in Singapore to offset their bills with a certain, obviously not the total one, total 100%, but with a percentage of it. And that the good news is that those amount of money can actually fit into the bottom project, like us, that we are doing the preservation and the conservation, and help us to funnel the money from the brown fossil fuel company, the airline companies to fit into the bottom line project. Yes, back to you.
Thanks very much, Manny, for that good example there. And I'm starting to see some more questions actually coming in place, and one of them actually is related to what we just discussed. And it was about whether or not carbon credits can be sort of looked at as a type of income for companies or industries, where they would buy those carbon credits and then sell it back to industries or companies that's deficient in those carbon credits. I think there might be a little bit of confusion here as well in the audience in relation to regulated carbon markets and the voluntary carbon markets. Maybe, Neo, if you'd like to tackle that and see if the other panelists can add on.
Yeah, sometimes for that kind of question, I would say that we should understand there are two different types of credit. One is carbon credit provided by the emission reduction enterprise. The other will be allowance for the emitter of the industry and who want to reduce their CO2 emission. Sometimes they over-reduce and they can create more allowance that can sell to other company under ETS. They want to buy more allowance to apply their low regulation. So that's kind of different. So in this question, they mention about deficit of the CC. Sometimes I think it's a kind of deficit of allowance, right? And that's under the national ETS, not the voluntary carbon market.
So like the ETS that you're referring to would be the regulated type of markets whereby there's a set quota of allowances, and that's where you sort of like buy and sell in terms of those who are deficient in it because they have some sort of penalty for not keeping within the allowances and things like that. Whereas the voluntary carbon markets would be something more of that you can actually buy it as a voluntary basis. It doesn't have to be that there's someone that's deficient in it, especially at this point, where everyone is still like, yep, I don't have to buy it sort of situation. Yeah. Okay.
Yeah.
Li Jun, with that, I think I have some comment. Would you please able to share the bar chart that I've created on that?
Okay, let me just quickly retrieve that. Sorry about that. Maybe you can start the
Yes, basically, I think it's more or less like ETS, the sectoral adjustment, and also on the voluntary carbon unit. Why I want to mention about the VCU is actually because we are almost a last resort for companies to offset it. So basically, for company, what they would do is actually I call it a 4-step. They would avoid it. Let's say for a brown fossil fuels company, for airline company, they try to avoid, first of all, to see if they can do without it. And then the second part is reduce and replace. And finally, they have the residual emission, which they want to pay the tax bill on it, or they want to offset it by buying some credits from elsewhere. Okay, so I think most of the industry participants, they basically lean on these 4 strategies. So usually we are talking about the brown fossil fuels crude oil producer, like on the chart. And then for us, in order for people to buy the VCU, actually we have the last resort, as I've just mentioned. So I want to bring the awareness of people that if some case the industry can help the VCU part to increase their status by sharing with the mandatory unit or somewhat, that would be helpful to us of creating more values to the voluntary carbon units, creating more values in it by having the ESG way. That's I want to share with you. Back to you. Thank you.
Right. Thanks very much, Manly, for that contribution into that. And also, I think in the conversation with Billy before the webinar as well, he did mention that these in relation to this thing about whether or not companies would be able to hold it and then you see it as a revenue income, it comes back to this whole topic of liquidity, which we mentioned briefly just now. If let's say you're holding it, but it's very difficult to trade it, and there are no places to trade, and there are no sort of sufficient number of buyers, or the period takes like 6 to 8 months before you can trade it, then it becomes something that companies probably will be a bit less a bit more hesitant actually to treat it as a type of income per se at this point in time. But with the various technologies that we've been discussing just now, it seems like we're moving towards that direction whereby we're trying to increase the activity in the carbon market in order to start overcoming some of these barriers as well. And we do actually also have one more question in relation to carbon capture and storage, whether or not this type of technology is effective. It is controversial at this point, but is it something that, you know, the carbon markets are actually gearing towards? Neil, would you like to comment on that?
Thank you, Li Jie. I'm not so sure how efficiency of the CCUS, but I know there are two main points about this technology. First, people care about use clean energy to observe the CO2 from the atmosphere. So if you use traditional electricity, that still create more emission than you can storage on the ground. And second will be the leakage. Most of CCUS use the oil mine and inject the CO2 on the ground. Sometimes in long term, people care about it might gradually release back to the atmosphere. So for these are main concern right now. But this technology is popular. And as I know, the cost is still higher than the credit. I believe in future, I hope more people will buy the CCUS credit to support this technology. Currently, those projects of CCUS managed by the large oil company, and that's also the good behavior for them to storage by the oil, the CO2 on the ground. So I'm fully support this technology.
And I think like when we're looking at the trends as well, it seems like, you know, the carbon storage part of it is also something that more and more carbon markets are paying attention to it. Because like as you pointed out, you know, at the end of the day, even if we completely did not have any emissions at all, you know, there's still going to be too much emissions already up there. So there is something that we need to do to reduce that down as well. And we've seen a number of big investments being made by, of course, the likes of Microsoft into companies, into technologies that are into carbon storage. There is the direct air capture type, but there also are the more nature-based types where they are using sort of like the algal growth and then using technologies to inject it down into the deep sea where it can't rejoin the very mobile carbon cycles. So it's sort of like it's not just a single type of technology that's out there for carbon storage. There's a lot more exploration being done right now, and there are already projects that are moving in that direction. Okay, right. In that, I guess like with COP28 sort of closing its the curtains for now, I'm sure that our panelists here have actually been paying attention also to some of the developments that have been happening at COP28. I was wondering maybe you could share a little bit of your thoughts on that. Maybe we can start with Derek, and then Manli.
Yeah, maybe I was just going to say, maybe I'll share this. And as I mentioned to you earlier, I need to hop out right before 6:30 for so let me just share some thoughts on this. And yeah, since there's no consensus on the on Article 6.4, there may be implications where more investors and corporate buyers will be engaging with the VCM market, with the voluntary carbon market. And although it's unfortunate that there was no agreement, but I think part of the implication is that I think more people will be participating in the voluntary market. And also national level governments might start to enact more with the VCM market, the virtual carbon market, in order to carry out bilateral trades under Article 6.2. So some of the takeaways from COP28.
Thanks very much, Derek, for that. Yeah.
With that, Li Jing, if I may, thank you for inviting me, and I need to hop out. I
Yep.
apologize, and thank you all the other participants. Thank you.
Thank you very much,
Thank
Derek.
you. Thank you.
Yep. Thank you.
Thank you.
Thank
Bye.
you. Bye-bye.
Yep. And with that, I guess I would like ask probably Manly and Leo any last thoughts or things that you would like to add on to what Derek was sharing about COP28 and the recent developments in the carbon markets.
Yes, Legion, I may want to start it.
Sure.
Can I?
Go ahead, Manly.
Yes. Yes, I've also prepared a slide on that.
Yep.
Would you please help me to bring that out?
Yep.
So basically, I have here depicts the different scenarios of what's happening. I have on the left-hand side is the scenarios in terms of whether we can achieve the 1.5 degrees Celsius, which is the optimal net zero emissions by 2050, and then below 2 or 2.5 we consider already a victory for our war against the global emission. And then obviously number 4 is very hot, which is plus 3 degrees Celsius. So on the you see the XY coordinate on the horizontal axis is on the far end of X is basically policy sectors and government concurred on net zero. So we sort of like see this happening in the COP28. And on the vertical axis is basically what the participant, what the stakeholders, individual companies that they're doing. Okay, whether they responded in a coordinated effort or they have all their own agenda, do it in a different time zone, different times. So with that, the 4 scenarios is basically up there. On the far right, upper top is a utopia, meaning that people are doing everything that's right, and then we have a very nice scenario of 1.5 degrees Celsius that we may not, as the carbon credit may not be needed as what we're anticipating. So this is basically I call it utopia. But I assign this a very low probability of happening. So on the other two wings, basically with the green one, we see this as this disorder and also insufficient, not able to make it as the ideal degree Celsius. But then we still have a carbon offset market there. People still need a lot of carbon market to offset it. So because either you are doing it with a cooperated effort or having divergence, because all in all, efforts are not enough. So they have to buy some credits. The credits, make the carbon credit more expensive or more treasure in the futures. So obviously on the bottom left corner, we have too little too late, which no matter what we do, carbon prices are high, but then it's already too late, that we cannot achieve anything. So it will be a very high degree Celsius in the futures. So I think that would basically draw our mindset into what's going to happen. So the good news is that carbon credit is going to be very on an uptrend. Basically, I wouldn't say expensive, but on an uptrend. Most probably the most probable time scenarios. Yes, back to you.
Yes.
Right. Thanks very much, Manly.
Yes.
Yep, Neil, you'd like to
Yes,
chip in?
followed by Manny's presentation, I will say that during the COP28 in Dubai, those 6 standard body, ACR, ART, GCC, Gold Standard, and VCS, they collaborate independent carbon credit programs and aim to promote scale and integrity in carbon market. The coalition seeks to operationalize Article 6 and NDC under the Paris Agreement. So I think that's quite good news. These 6 standard bodies work together to enhance the integrity and transparency. So I think those mechanisms can really enhance the function of voluntary carbon market and also to achieve the goal of the Paris Agreement.
And that's very true. I think like also at this point, 1.5 degrees Celsius, of course, there may be some contention of whether or not, that's the target one or whether you should aim below it. But what we know is that the science projects us to actually be going way beyond 2 degrees Celsius. So if we can even get it down to 1.5, that would already be considered some form of utopia already at this point. There are already a number of climate effects that's already locked in, and we're starting to see some of it already coming in place. With that, I'd like to just quickly share 2 points that Billy actually submitted to me as misconceptions that people tend to have. And the first one actually was in relation to people saying that, climate deniers are basically the ones who don't support carbon markets, or they can't work on, healing the planet and things like that. But through the experience of actually working through carbon projects, whereby it is true to the purpose of solving the climate crisis and sustainable development, you actually do see that so-called climate deniers are actually also very keen to heal the planet and protect the well-being of people. So before we sort of like just get lost in this whole world of carbon credits and carbon markets and all that, we have to come back to what is the purpose of these toolboxes, these tools in the toolbox, which is actually to preserve human well-being and to avoid these catastrophic situations we will find ourselves in the climate crisis. And with that, we can actually find common ground with different people instead of arguing over these sort of so-called finer details in that sense. Is that what is that common ground for us to start bridging more action at a faster pace so that together we can actually avoid this catastrophic climate effects and really stay within the safe and livable realm. With that, I think we're coming to the end of our webinar. I guess I'd just like to quickly run through our panelists to see if there were any other thoughts or final questions. Final thoughts that you would like to say to our audience. I know Louis has been a bit silent because he has been a presenter, not the panelist discussion. So maybe we can let Louis go first for any final thoughts, and then we'll come back around to Manli and then Neo. So Louis, maybe you want to go ahead.
For me, from a private capital market side, is that carbon credit is definitely an area have to assign high priority, and then quite many of them have received a lot of investment, right, over $100 million and all that. But the methodology side and the project developer are really needed, because or else it can be lead to somewhere that the carbon credit is not recognized by the carbon exchanges. So I think there's a desperate need for more methodologies to be approved by a reputable body. Back to you, Li-Jeng.
Yeah, thanks very much, Louis. Manli?
Yes, on the climate issues, I want to be by being the stakeholders or participants of this effort, I want to be more optimistic rather than pessimistic. Though I think it's a huge challenge ahead, but I think together we can do it. As a Earth participants or the Earth people, I think if we act together, if we act fast, definitely it's not a business as usual that can help us. So we have to everybody move a little bit, the corporation move a lot, and the policy sectors and then think ahead. More strategies and set, and then help to shape up this market, and then funnel in the right capital to do it. Definitely, we wouldn't be the era that is capitalist, because it's not the bottom line concept anymore. It's a meta purpose. With companies, like if they can make money, they can do it more ESG way. I think we will finally achieve this goal.
Right. Thank you very much, Manli. Neo?
Yeah, thank you, Li-Jeng. I think we need more international collaboration. There's a gap between the developed country and developing country. We need more help from the developed country to give more financial help or technological help to the developing country. People in developing country, yes, they need to take action, but they also need to get the property relief. So at the same time, we need to have a better planning, but we also need to have a balanced development. So let's have a more cooperation in future, and let's see more progress in COP28. Thank you.
Right. Thanks very much with that. And just to sort of end the final part of this webinar, I'd like to actually just re-show this picture that our association actually has come about. And if you can see that, the carbon markets, even the voluntary carbon markets, it's not like a single sort of a single company is going to be able to solve everything on their own situation. It's not just the buyers, it's not just like the people who have the projects, but there are a lot of other companies and talents that we actually need to pull together in order to actually make it much more easier for companies to get their carbon projects onto the getting credits issued in the first place, and then even having those credits traded and sold so that the financing can actually go to where they are. Of course, we do realize that companies are at different stages in terms of how they're addressing sustainability and how they are addressing the climate situation. We at the association envision it that there are actually just 5 things that companies really need help with. And it starts off with figure things out. If you are struggling in your business to actually figure out what is your climate strategy, how does it fit in with your overall sustainability agenda and commitments, whether or not you would have any tax liabilities or even, risks that you're unaware about, please reach out to us, because we have a group of sort of suppliers and vendors that are there to help you figure it out. If you already do know how you're going to do it, but you don't know who on the ground can help you do it, please also reach out to us, because we also are accumulating more vendors and suppliers to actually try and help you solve your problem much faster. Instead of you trying to build everything in-house, we want to help you achieve that pace and the scale at affordability that can work for all of us. Also, if you find that your talents or your employees or your supplies chains and vendors need to be upskilled so that they can talk to you on the same page and understand what you need to achieve your sustainability commitments and climate commitments, we have also the Learn It group of companies as well that's supporting, of course, our association's educational part of it. We are also, we have launched our ESG Ready certification program to actually really just get people into the baby steps of getting on the same page of talking on ESG. And with that, I'd also like to share that we have launched our Carbon Market Journey Readiness program, which if you don't know whether or not you have a carbon project idea, you're very confused about all these different steps that's needed for you to even participate in the carbon market, please reach out to the association. We have this course ready for you to help you understand it much better and guide you through. Of course, we have our providers as well in the Do It section and the Measure It section that could help you with that. But of course, an important part of this, which is also in this webinar spirit, is that we need to help communicate this much better. There is a lot of misconceptions. There is a lot of information asymmetry. There is a lot of parts where we need to find common ground. And our association is also pulling together a task force of professionals that are involved in communicating this much better, be it in-person events, live events, webinars, marketing, copywriting. We're actually tapping into their professional skills to be able to help us get the genuine messages out there. There is a lot of lobbying that has been around. I saw in the Q&A, someone actually said, at COP28, rejecting fossil fuel completely was not accepted. And of course, there's going to be people who said it was all the lobbyists. But then we have to actually ask ourselves as well, if we are the so-called people who are doing the genuine work, what are we doing as well to make sure that our genuine message gets across effectively in order to drive more change? That's action. Regardless of whether we step up and take action or not, there's going to be someone going to take action, and there's going to be someone going to make money from that actions. So there's a famous quote from a movie, which I can't remember which movie. The only thing that good people need to do for evil to triumph is to do nothing. And with that, I'd like to highly encourage you all to reach out to Circular Business Association. We are an ecosystem builder. we are on a journey, and we are continuously trying to learn faster together as a mastermind so that we can solve this great issue together and create a livable world. With that, thank you very much again to Louis, Manli, Neo, Derek, and Billy, who contributed to our webinar today. I look forward to seeing more of your participations in our events moving ahead. And with that, thank you again. Have a great week ahead. Merry Christmas, Happy New Year, and we'll see you in 2024.
Bye-bye.
Thank you.
Merry Christmas.
Thank you, Louis.
Happy
Thank
New
you,
Year.
Li-Chu.
Thank you.
And thank you, Mandy. Thank you.
Thank you.
Bye-bye.
Bye.
Bye.